reasons to buy real estate in an IRA. Hey everyone, Adam Bergman here, tax attorney and founder of IRA Financial, and welcome to another episode of AdBits. Today, why you want to use an IRA to buy real estate. What are the three key reasons you need to keep in mind before deciding or before choosing to buy real estate in an IRA? And here they are. Key is investment diversification, tax deferral or tax-free growth, and the ability to invest in what you know and trust, which I believe breeds stronger investment returns. So those are the three key reasons, in my estimation, as a tax lawyer, why you would want to use an IRA to buy real estate. So let's attack the first one, diversification. The whole concept of investment diversification goes like this. You want to be able to have different investments in your retirement portfolio. You do not want to put all your eggs in one basket, right? That's the simple, basic ABC for investing. You don't want to own one stock and put all your retirement savings in one stock, or maybe put all your retirement savings in the S&P 500 or NASDAQ or in the tech sector or the Magnificent Seven, because things change over time. And when you invest a retirement account, it's supposed to be for the long term, right? You're talking about a horizon of at least 30 to 40 years, right? If you start saving in your 20s or 30s, you want to be able to continue up until your 70s. So it's at least 30 to 40 years. Things change. The Magnificent Seven today will not be the Magnificent Seven tomorrow, right? 10 or 12 years ago, real estate was a different asset class than it is today. Same with private equity or hedge funds, venture capital, whether it's gold, cryptos. The whole idea is you want to have exposure to different asset classes, right? And I'm not telling you anything new, certainly not giving anyone investment advice. That's not my job. But as a tax lawyer, someone who's had a retirement account for 25 years, someone who's worked with a lot of clients, over 25,000 clients, the clients that are diversified tend to be the clients that are most successful from an investment perspective. So using an IRA to buy real estate just solves that diversification puzzle. Why? Because probably you, just like most Americans, a big bulk of their savings are tied into equities, whether it's ETFs or mutual funds or just individual stocks. That's just where most people's savings are. So from an IRA perspective, if all your private personal money is tied into the equity markets, then there is a strong belief and a growing belief that diversifying, gaining exposure to real estate, number one, will give you appreciation, asset appreciation, will also give you income producing asset exposure, especially rental income, whether it's multifamily or even commercial, where you're getting cash flow. If you're getting hopefully an asset that will appreciate in value, go up, you're also getting cash flow, just kind of like a dividend on a stock. But again, it goes back to the idea of don't want to have all your eggs in one basket. Let's get exposure to different investment classes. And a lot of smart investors feel that gaining exposure to a hard asset like real estate is a great source of diversification, along with a really strong hedge against inflation. The second is obviously being able to buy real estate without tax, right? The simple example why people use an IRA or a 401k or Roth IRA to invest is all the gains go back to the retirement account without tax, right? So here's some simple basic examples. You buy stock for $100, you sell it for $500, you don't pay tax on the $400 a gain. That is deferred. That goes back into the retirement account without tax. When you pull the money out after 59.5, you'll pay income tax on all the cash you pull out. Or if you have a Roth IRA, so long as you're over 59.5, the Roth's been open at least 5 years, it will all be tax-free. So from a deferral perspective, it just makes a whole lot of sense to invest in assets that appreciate. So if you buy a rental property for 300 grand and sell it for 600 grand, several years later, all the 600 grand, including all the built-in gain, goes back into the retirement account without tax. Now, let's say you get some rental income, $20,000 in net rental income a year. That goes back into that retirement account without tax. That is known as tax deferral. Compounding returns, your money will grow faster when it's not subject to tax. Assuming an 8% rate of return on your investments, your money will double every 9 years. If you get a 10% rate of return, your money will double every 7 or so years. That's the rule of 72. So when you can supercharge your returns, hopefully with real estate investments, using the power of deferral, compounding returns, and in the case of raw tax-free growth, is such a marriage made in heaven, which has made real estate the most popular alternative asset class for IRA investors. And then thirdly, this goes to the idea of diversification, being able to invest in something you believe in or something you know, right? A lot of folks just don't understand Wall Street. Why does the stock go up and down? Company beat their earnings. Why did it go down? Company missed its earnings. Why did the stock go up? I don't understand this stuff. It's not exciting. It doesn't gravitate towards me. It doesn't pull me in. So yeah, I invest, but I don't feel the passion. But real estate, I'm passionate about. It's something I understand. I love. I go online all the time looking at deals. I look at property prices in my neighborhoods. I look at vacation home properties. I just like real estate. It's tangible, physical. I can see it. If the market drops 1,000 points, I don't care. I can always rent out my home for something and have some cash flow. And then over time, I believe real estate will prove to be a successful asset. But on top of that, I just get real estate. I understand it. I know how to look and pick value. I see a home. I know, hey, this I could put a pool in. I can fix the landscaping. I can fix the bathrooms. And by doing that and putting a little bit of money in, I can increase the value significantly. There are a lot of people that just are good at this stuff, right? Like my wife sits home and watches, well, not sits home when the kids aren't driving her crazy on the weekends. She's watching all these like fix and flips and these HGTV where people are doing all kinds of really cool design stuff and development stuff and fix up stuff with homes. And that's something she loves. And there are so many people that just feel that passion and get it. Whereas they look at ETFs and mutual funds and they see tickers and they're just like, I don't get this stuff. Yeah, it's going to go up over time. I know it. The S&P 500 has averaged about 10% over the last 100 years. So it is smart to invest in equities. I'm not saying not, but it's also, I think, important to diversify. And I also think it makes sense to invest in assets you get and you're passionate about. I just think you're going to be ultimately a better investor, smarter investor, and a more successful investor if you're investing in assets that you really believe in and you feel like you have this secret sauce to pick the right asset. So that's just something I'm super passionate on is invest in what you know and understand and what you believe in. Whether it's, I don't want to invest in coal companies or I want to invest in AI because I can get AI. That's your call. It's your money, right? The government can't tell you how to invest. It's your decision, but you have the power, right? The beauty of America, the beauty of the US retirement system is the tax code does not limit you in raw terms of what you can do. There's only three minor things you can't do with an IRA. One, you can't buy life insurance. Two, you can't buy collectibles like art. Thirdly, you just can't engage in any transaction that directly or indirectly personally benefits a disqualified person. And a disqualified person is you, your lineal descendants, parents, children, spouse, daughter-in-law, son-in-law, or any entities 50% or more controlled by such persons. Otherwise, you can do it. So the tax code doesn't say, oh, self-directed IRAs can only do this and IRAs can only do that. No, there's no distinction. There's no word self-directed IRA in the tax code. It's just 408, which says you can't buy life insurance and collectibles. 4975, which says you can't do transactions that directly or indirectly benefit a disqualified person. Otherwise, you can do it, whether it's cryptos, gold, real estate, hard money loans, private equity, venture capital, credit funds, real estate funds. You can do it. Okay, so gaining the ability to diversify, generate tax-deferred, tax-free income in your IRA with a real estate investment, and then just as important, if not more important, being able to invest in something you believe in, and you trust, which ultimately I think will make you a better, smarter, more successful investor, is why so many millions of Americans have turned to real estate as their source of investment diversification. They'll have an IRA with Fidelity or Vanguard to do equities, ETFs, mutual funds, and then they'll take a percentage of that, whatever works for them, and then allocate it to real estate, particularly to gain diversification, generate tax-deferred or tax-free income or gains on the sale of that real estate asset, and also invest in a physical, tangible asset that's a great hedge against inflation, and also something that they just are passionate about, get, and believe in, and are excited to own, which is the whole point of the game. Yeah, you want to generate strong returns for retirement. That is crucial. But I think having a passion goes along that success trail, where if you're passionate and care and follow that investment more closely, you're just going to end up making more money because you're just more focused on the investment versus just sitting and watching the stock market act like a yo-yo over the next 30 or 40 years. Now, probably should do that as well, but diversification through real estate has become a great play for millions and millions of Americans. So that's it for today. Hope you guys enjoyed the podcast. If you're watching on YouTube, thumbs up, appreciate it. If you have comments, questions, please leave them. Love hearing from all you guys. This is a weekly podcast. As you guys know, it drops every week, which will give you a bit of information on various self-directed retirement topics. So check it out next week. You can also go through our feed and go back and search and listen to any other podcast you wish. And the good news is these just stand the test of time. Whether you're listening to this in 2024, 2022, or 2028, the three keys are still going to be the three keys to buy real estate in your IRA. So just because it's an older version of a podcast, or maybe you're listening to this several weeks after it posted, don't worry. Like, the topics are still good. That's the beauty. This is all for education. I throw in some topical type podcasts here and there, but a lot of times the beauty of the retirement world, it's very static, doesn't change. The rules on IRA investments have not changed since 1974. So it's pretty bland. It's not that complicated or scary, but the upside is so huge and so exciting, which is why I do this every day and why I love it. So thanks again for listening. Have a great day. And I'll see everyone again, you better, next week. Thanks.